Wall Street is heading into the weekend with a new fear. This is no longer just a story about Iran. It is becoming a story about a wider regional war, and that is exactly what markets hate most. Today's biggest headline was Yemen's Houthis confirming their first attack on Israel in this conflict, a sign that the fight may be spreading beyond Iran itself. When traders see that kind of escalation, they do not think about one headline. They think about what could break next. The first thing they watch is oil. And right now, oil is the market's pressure point. Reuters reported that prices are expected to stay elevated across different Iran war scenarios, with analysts warning that Brent could remain very high as long as supply routes stay under stress. The Strait of Hormuz, one of the most important energy routes in the world, normally carries about 20% of global oil and gas transit. So when that route is disrupted, the market immediately starts pricing in more inflation, more cost pressure, and more risk for the global economy. That is where the second market worry comes in the Federal Reserve. Philadelphia Fed President Anna Paulson said this war could lift inflation expectations, especially through higher fuel and fertilizer costs. Richmond Fed President Thomas Barkin also said the economic outlook is back in a fog because of geopolitical tension and the oil shock. In simple terms, if energy prices keep rising, the Fed may have even less room to cut rates. That is bad news for stocks that need lower rates to keep moving higher, especially growth names and the broader risk trade. And the market is already showing that stress. On Friday, the Dow fell 1.7% and officially entered correction territory, down 10% from its February record high. That tells you investors are not treating this as background noise anymore. The quote-worthy line for this market is simple when oil becomes the headline. Stocks stop trading on hope and start trading on fear. So for the next session, the setup is clear. Investors will be watching three things: whether the war spreads further, whether oil pushes even higher, and whether that forces the Fed into an even tougher position. If those pressures keep building, risk appetite could stay weak and defensive sectors may keep winning. If tensions cool, markets may finally get some relief. But for now, the weekend story is not comfort. It is uncertainty. Don't forget to like and subscribe for more daily market recaps. This is Wilson.